Nike stock just reported earnings. It's now at $84 a share, down 12% today and over 40% for the last year. Let's talk about my updated buy price for Nike shares and if I think the stock is a buy or sell right now. The company actually hit their sales and earnings estimates for the quarter, but this is the reason that Nike stock is down, and it's actually taking down other retailers as well. Under Armour's down 4%. Lululemon's down 3%, Dick's Sporting Goods is down 3%, and Foot Locker is also down 3.3%. All right, they said they saw inventory soar 44% to $9.7 billion as it took holiday supplies early, bounced back from some of the pandemic-related supply chain issues of the last 2 years. This is it right here. It's all about margins and profitability. We've decided to take that inventory and more aggressively liquidate it so that we can put the newest and best inventory in front of customers in the right locations. That means that more aggressively liquidating means more sales, lower revenue per item sold, and so they're actually not going to make as much money in the items that they sell. For a while, I've actually said Nike was overvalued and I wasn't buying. I don't own the stock right now. This is the reason why. It's very simple. If you look at this line, this blue line is the average PE ratio that Nike has traded at since really 2002. And we can see this line right here represents the share price. So back towards the end of 2021, it was just way too high at $174 a share, a PE of almost 48. So now, as of yesterday, shares were down at 95, and it was down to a PE of 25. Today, it's down in the 80s, so it's actually probably closer to that normalized PE of 23 or so. And so this right here is exactly why I have not owned shares. But let's talk about if I think shares are a buy or a sell moving forward, and if so, what price would I buy shares at? Here's how we get to these numbers. We take ticker.com, we take the analyst expectations for what's going to happen over the next few years, and we're going to build a scenario and just put out some probabilities. These are not going to be 100% accurate. These numbers are definitely wrong, but investing in stocks for the long term is about understanding fundamental values of a business. What do the metrics look like, and what probabilities are there that the stock is valued higher or lower than it is today at some point in the future? This is how we do that. Okay, analysts are expecting revenue to grow 5% in 2023, 10% in 24, 9%, almost 8%, 8% in 26 and 27. So it's about a 9% annualized growth rate. Let's look at earnings growth. GAAP earnings growth, generally accepted accounting principles earnings growth is expected to be 42%, 18%, 15%, and 14%. So still, double-digit teen growth in 2027 for a CAGR of 22%. Okay. Then they're expecting net income margins in 2027 of 14% because they are moving more to direct sales. So when they can sell online, they can sell direct to customers, they can actually make more off of that over time than having to sell through stores and other retailers. Okay, so they're expecting that to tick up to 14%. Free cash flow margin, 12.7%. And then gross margin, it's at 43% in 2023, ticking up to 48%, again, because of that more direct sales, right? So let's put all of this into a 5-year model using Everything Money's little calculator here. I like this calculator. And we could put a low, a medium, and a high scenario. So I've got 7% revenue growth on the low, 9% on the medium, 11% on the high. Profit margin, we just kept at 14% across. Give or take a percent here or there is not going to make a huge difference. And then free cash flow margin of 13%. Then the PE right now, according to this, is at 21.8. So I have it going down in the low scenario 15, mid 18, and high of 21. Price free cash flow 20, 23, and 25. We're looking for at least a 10% annualized return. If we want all of those things, if we want a 10% return, I'm going to hit analyze. It's going to tell us a low, a medium, and a high price that we would be willing to buy shares at today if we believe these scenarios to be true and we want that 10% return. So I want to know in the comments, what do you think is going to come up right here? Is it going to be overvalued right now or undervalued right now? All right, 3, 2, 1. I'm going to hit this analyze button and let's see if you were right or wrong. All right, if you believe this low scenario to be true, 7% revenue growth, 14% profit margin, then you would not buy shares until they hit 72 or lower. If you were looking at it from a discounted cash flow value, so from price free cash flow, you'd be at a low of 83. The middle scenario is 90 and the high is 111. Okay, so that is the ranges for this stock. 72 on the low side, 90 in the middle, and 111 on the high. I personally am not going to be buying shares of Nike, even though I think it's a fantastic company. I am heavily invested into growth, software stocks, and I just like the upside of those stocks better. But Nike's a fantastic company. It could be a great investment